contest.
In fact, let's get more on Intel and bring in Vijay Rakesh, who's a senior semiconductor analyst at Mizuho. He has a neutral rating on Intel. You know, it's interesting because they're talking about this supply chain constraint. The CFO told our colleague, Christina Partsinevelos, quote, "We have been improving our supply chain every quarter, our supply every quarter, rather, but it's not enough. So we'll leave quite a bit on the table in Q1. How much does that matter, Vijay?
Matters a bit for sure, because what they're seeing is a better outlook on the server side. And so that is definitely a tailwind for them. But I think what's also happening, which is really the crux of the issue, is the yields on their 18A, which is the node that they're using to manufacture some of these products on the server and the PC side, are still behind. As CEO Lip-Bu mentioned, they still need to do more work on improving the yields there. And so that is what will really drive capacity, but that takes time. And the second thing I would say is obviously foundry. That seems to be a major roadmap for them, and they're still working on getting new customers on the foundry side. So,
what do you mean it's a major roadmap for them?
They've talked about foundry being a focus as they start to ramp, advanced packaging, as they start to ramp the next node in getting new customers as foundry customers looking out over into 28, 29. So that could be a significant incremental revenue for them, but that's still yet to be decided because they still need to get customers there. So.
Vijay, obviously exaggerated moves in this stock. This 15% decline today comes after the stock was up 40-some% just this month. So clearly it's trading on just a lot of emotion and energy about where this company can ultimately get to. It's back to like 5 times forward sales as a valuation. It seems like it's already, getting a little rich there. So what can the company do, and what are the kind of landmarks along the way to know if they're going to justify this?
Yeah, that's a good question, Mike. I think as you look at Intel, it's obviously up 100% plus in the last 12 months. So definitely outperformed its peers like NVIDIA or AMD. But as you noted, it's kind of pulling back a little bit. I think there are some challenges here. The valuations are attractive, as you noted, but they still have some huge milestones they need to hit. Especially they need to stabilize share on the server side. They need to improve their roadmap on the PC side with Panther Lake. They need to improve 18A yields, which is the 18A is a node that they're using for Panther Lake on the PC side and the server side. They need to improve the yields to get better capacity and stabilize margins. And they also need, on the long-term roadmap, as we are just talking to Contessa, you have the foundry roadmap, where they need to show good yields and then get customers locked in. And that obviously takes time, but that's again a 2028 problem.
But Vijay, do you think that the customers are holding back because they want to see the company, they want to see Intel putting the capex toward ramping these products, and they're not willing to commit to Intel until they see that the company's doing capex, and then meanwhile you have the CEO saying, "Oh, we're going to hold back until we get the customers."
Agree with what CEO Lip-Bu is doing. I think we can't put the cart before the horse. I think what they have to show first is very good yields on 18A, the capacity to ramp their in-house products, PC and server, to meet those yield targets and to hit those margin targets. And that's what gives confidence to the customers. And the customers will come. So I think that is where the focus is, and that seems to be the right focus. And once they lock in customers, they can easily ramp up equipment. That seems to be a fairly easy roadmap there. So.